Alabama.
Thank you. Chairman Bernanke, the Chairman Frank asked you about the commercial real estate market. And you mentioned the TALF programs for the new and legacy program. The new program has been in operation about a month. Is that right? Taking loans and
Yes, that's right.
and the legacy just about a week. Is that right?
Yes, sir.
I noticed you're going to cut those off December 31st.
The program as of right now is slated to end at the end of the year, but we will be reviewing those programs and others to assess whether or not they're needed beyond that time.
Yeah, I noticed several others run through the end of 2010, so it sort of...
We extended several, sir, to I think February
Right.
of 2010, not to the end of 2010.
Okay. What is the state of the commercial real estate market?
Well, for a good bit of the recent years, the commercial real estate market was actually pretty strong, even as the residential market was weakening. But as the recession's gotten worse in the last 6 months or so, we're seeing increased vacancy, declining rents, falling prices, and so more pressure on commercial real estate, which is raising the risk of lending to commercial real estate. So that is certainly a negative. And as I was mentioning to the chairman, the facilities for refinancing commercial real estate, either through banks or through the commercial mortgage-backed securities market, seem more limited. And so we are somewhat concerned about that sector and are paying very close attention to it. We're taking the steps that we can through the banking system and through the securitization markets to try to address it.
I definitely think that may be the wild card. But I know Deutsche Bank this week came out with a report, and Smith Barney last week that obviously raised concerns. You have talked about a resolution authority for non-bank financial institutions. You know, and you've referred to that as expedited bankruptcy. Would it be within the bankruptcy code? Would it be part of the bankruptcy regime?
It would be a special regime that would be invoked only under circumstances of financial stress, and would be analogous to the laws we currently have for resolving failing banks, which allow the regulators to intervene before the actual bankruptcy occurs to avoid the negative impact of a disorderly bankruptcy on the market.
Yeah.
So yes, it could be in the broader bankruptcy regime, but it would be a special category of bankruptcy that would be invoked only during financial crisis.
You know, Enron, WorldCom, Drexel works very well, the bankruptcy regime. And do you agree that it's very important that you force creditors to internalize the cost of their credit decisions?
Absolutely. Otherwise, you have a too-big-to-fail institution which doesn't have any discipline other than the regulatory oversight.
So this regime would totally reject the too big to fail. I mean, you would not be asking taxpayers to guarantee or backstop losses?
Absolutely. I think too big to fail is an enormous problem. If we don't do anything else, we need to solve that problem. This is a critical element in solving it because it would mean that creditors would take losses. If there are resolution costs, the presumption is that they would be paid by assessments on other financial companies.
Right. You know, the Republicans have proposed, our financial services regulatory reform proposal includes an expedited bankruptcy within the bankruptcy code. And I would ask you to pay particular attention to that. One thing that I'm also concerned about is even having the financial system take those losses, or the taxpayers, and would hope that that we would preserve a true, if we call it expedited bankruptcy, it in fact is expedited bankruptcy. I thank the chairman for his testimony.